In this sector, what percentage of your profit are you willing to part with to achieve these things?
The private sector will always play a role, but you can't over-expect what you're getting out of private sector. Just look at Johannesburg. There's certain areas where our developers are building their own roads, are putting their own sewage and water plants in.
That's almost the standard.
But that's not normal. We've stepped in because government has not been able to provide.
You broke down the percentage of what the 100% of tax revenue was. Correct me if I'm wrong, but 60% of it goes to social wage, 20% of it goes to interest on our debt bill, and we're left with 20% to run the country.
That's right. Wow. There was a stat I read somewhere, which was 1 in every 3 are coming back to South Africa. The guys who've sat in London, who've sat in Australia and elsewhere, and they bring with them their own ability in terms of how they've worked and the work ethic. And we're starting to see that starting to move back into Joburg, which is quite exciting.
Yeah.
In my view, we need to fix our economy. We need to create jobs. We need to create living wages. Those are the things we should be focused on, because you want to play in this growth that is about to come, and you can't be too late to the party.
Yeah.
Welcome to the Corner Office, where we bring you the latest news from the world of commercial real estate, the greatest voices in the industry, and the corporate chats you've been missing. Let's get to it.
Mesh Pillay is the founder and CEO of YW Capital. They're a global corporate finance business raising capital from across the world. You've got sovereign funds, you've got private family funds. He worked in Russia for 15 years. He worked for Deutsche Bank 20 years ago. And he's got a wealth of experience, not only about the economy, but also about finance in general, working with family offices from across the world, and just in general, talking about how we can raise money coming into South Africa, the amount of time that we have to do it over the next 18 months. We need to get it right as a country, and just the GNU in general and the massive wall of capital looking to come into South Africa and how we can try and access that in general. It's going to be a great chat. Today we're talking about the big world of corporate finance, and I always joke with Mesh because they always arrive in suits, and lo and behold, he arrives in a suit today. I'm a little bit more relaxed in our podcast room, but yeah, the bankers are in town. We have the bankers in town. So last week, was it last week, the week before last, when we had Gibbs?
The week before last.
Yeah. So YW Capital, Mesh's business, sponsored an event at Gibbs Business School talking about how we can create investment into the Gauteng economy and the role of public-private partnerships in that investment. A fascinating talk. We had Henny Heinemans from DHL, CEO of DHL. We had Ashur Sarupin, who's the Deputy Finance Minister. Brilliant. He had a lot of insights. I love that. We had Trudy Makaya from BCG. And then we had CEO of DBSA who was missing in action. He was online and we were live. So it was a fantastic event. Thanks for sponsoring that. And it was just I think it was a great get together. And I think the questions that came out were pretty sort of thought provoking. Just over an hour session, and then of course the timekeeping of the Deputy Finance Minister cut us short. So that was that. So yeah, Mesh, welcome to our little studio. And I just wanted to jump in with try and explain to me in a nutshell, what is corporate finance? What is banking? What are the products that we're talking about? There's a lot of capital flow and a lot of capital raising effectively, and the numbers are massive. I mean, they're really, really big. So why don't we just start in a nutshell for everyone, because we've got, everyone listening ranges from, senior business executives all the way down to people looking to get into various different industries. So there's a little bit of an entrepreneurship here, but a lot of learning that happens at the same time. Yeah.
Sure.
Dumb it down for us.
I'll make it as simple as possible. Yeah. Corporate finance is really advising corporates. And you advise the corporates on mergers and acquisitions and internal development, and then you also advise them on capital raising. Our business focuses more on the capital raising than internal transactions. We often do transactions as a factor of the capital raising, but where we spend our time and energy is bringing capital, both public side capital and private side capital, to our clients.
Okay, and these guys are typically raising for whatever infrastructure project, or maybe it's an M&A type of activity, or maybe they just want to expand their business, or they want to acquire a building, or they want to move offshore. And there's a lot to go and look at that sort of cleaning up of the balance sheet and effectively looking where you can find funding.
Yeah, absolutely. I think a lot of our clients just need capital to grow their businesses. Some need to restructure their debt positions. Some need to restructure their equity positions. And so I'll give you examples of some of the work we do. You know, you would advise a family office in terms of trying to sell a position, you know, sort of in that family office. We're busy doing one now. I raised $2.2 billion for that family office. In other instances, we'll see a listed entity.
Are we talking in rands or dollars?
That's rands.
Rands,
that's
okay.
rands. We'll talk dollars just now, but that's rands and that's SA. There's another transaction we're doing where we're restructuring the business entirely. So from a listed entity to an unlisted entity, bringing in debt, bringing in restructured capital, and bringing in a strategic partner. And very often we bring in strategic partners, both locally and internationally, into the South African environment.
Okay, so let's talk about the pools of capital that are available, because I mean we're talking about significant transactions. I mean, 2.2 billion is, you know, significant capital, and I know we're talking in rands, but these can easily translate to dollars in 5 seconds. But talk about the pools of capital for investment in South Africa, and I want to kind of key it back a little bit to what we were discussing last week. How do we drive investment into Gauteng specifically? I mean, look, we're going to have to go into a lot of things there. But let's start with the pools of capital that are available locally. First off, people looking to invest into South Africa that are actually South African, and then secondly, what are we talking about externally for people to invest in South Africa? And we'll talk about South Africa as a whole, not necessarily just Gauteng. We'll talk about the whole because we've got to talk about the GNU, et cetera, et cetera.
Sure, that makes sense. I mean, I think let's start with the non-traditional forms of capital. So the banks will give you the traditional forms of capital. We'll start with the non-traditional. So family office wealth. In South Africa, over the last decade, the biggest growth has been within family offices. You're now sitting with numerous family offices with R1 billion and more in NAV and cash very often that can invest and reinvest in South African transactions. So that's the first pool of capital. But we don't just go to the family office in SA. We cover all family offices across Africa and in the United Kingdom and Europe, which brings a lot of capital back into SA. So that's the first form. The second is the pension funds. We will speak to every pension fund in this market, no matter how big and no matter how small. So not just the PIC at 3 trillion rands. You're dealing with some of the guys sitting with 20 billion. But the process there is you have to keep them informed. You have to work with them to attract that capital. It takes time and effort, and I think that's a big factor that people struggle with. It takes time. If you're going to a pension fund, don't expect to get your money in 3 months' time. And we mix and match, right? So depending on the need, on your capital need, we'll decide whether we can only approach family offices that can move much faster, whether you're going to approach a pension fund, that'll be a 12-month process.
Who's more aggressive out of the two, just in terms of, I mean, I know you've got investment strategy. Some people only want to go infrastructure. Some people only want to go, who's more aggressive?
I think family offices are by far becoming more aggressive.
And faster.
And
I thought, almost you'd wait for the pension funds because they're so aggressive.
Yeah.
Because it's almost like we have to spend this money. We're just willing to pay whatever yield to deploy. Yeah. But it's going to take us 12 months. Whereas the family offices are looking at capital preservation and can work faster, but they want the capital preservation. So.
But they want the capital preservation and the returns are different. So if you go into a family office, the returns are generally much higher than going to a pension fund. And so it's a give and take situation. You have a menu of options and we've got to fit that menu for the client that we're talking to. So that's the second category. The third category, and remember, we speak to all the pension funds, not just SA, across the whole of Africa. I'll give you one example. In Uganda, we have a social pension fund there that's almost $5 billion now. That's a Ugandan local pension fund. So those numbers are becoming quite significant. Then your next pot of capital is the private equity and asset managers, and that is both local and international. We speak to a lot of the hedge funds out of Europe and the UK as well that are very interested in opportunistic deals. So again, as I said, it depends on the transaction. And then the last pot of capital, I think, which is fairly significant, is South African corporate capital. And very often South African corporate capital will back transactions. And we've seen a lot of that come into, sort of transactions with us. So And it's also good to point out the difference between private capital and public capital.
Yeah.
So the public capital and the products around public capital are what you would historically call capital markets, and you do it on the JSE or some exchange, right? And that's whether you're doing a rights issue, whether you're doing an accelerated book.
Got you, yeah.
That sort of thing.
It's everyone who channels in through a certain venue, being the JSE.
The JSE. You have to be listed.
Yeah.
You have to be able to raise on that basis. What we've done over the last 6 years is build a private capital book. And the private capital market hasn't been developed significantly in the South African environment historically, because it was so easy to list and there was so much capital on the stock exchange that it made sense when you got to a certain size, you went to the stock exchange. Now we're seeing businesses that are 5, 10, 15 billion rand businesses that are family-owned, private capital businesses. Wow. And how do you raise capital for them? Because they don't want to be listed, and it's us accessing capital for those private transactions as well.
Okay, and I mean, if you look at the sort of comparison between the JSE, which we spoke about, which is regulated and pretty much everyone can invest. You got 1,000 rand, you got you got 50 rand, you got easy equities, you can put your money into the market, right? And that's sort of donated by a lot of regulation, etc. And so a lot of capital comes in through there, right? But when we're talking about this private equity and we're looking at property specifically in South Africa, if I look at the American market, for example, there's a lot of private equity type play in real estate where you don't really see that in real estate in South Africa. It's long-term holders. People are, you got a real estate investment trust, that's accessing the JSE type of capital. But then if you've got private investors, it's almost, they are the investors, private equity. It's not a private equity fund, for example, that's investing in property and they have a fund build and they want to dispose. It doesn't, that's very limited that I see. You guys are probably in that, you're in that space, but not a lot of people in that space.
No, and we raise capital for those funds as well, by the way.
Yeah.
So what we're starting to see in the South African environment is that is starting to grow. It'll take a long time, and it's where's the access to capital for those funds? How are they funded? And that's not so easy, and that does take time. But you're definitely starting to see very bespoke funds, either sort of funds that are focused on logistics, or funds that'll be resi funds. So there's a number of them.
Is it because we don't have the scale, or
we just don't have the scale? And also I think that because of the tax structuring, most sort of vehicles look to do a REIT structure, right? And we haven't finalized, those private side REIT structures. And I think when that happens, you'll see a lot more capital flow into the private side. But that we haven't quite gotten there yet.
Got you. I think there's only one pretty much sitting in the JSE, which is pretty much all held by one family, so it's not really there. Okay, so there was a comment by, I think it was Larry Fink, BlackRock CEO, saying, South Africa is actually, starting to get on the agenda now. That, we've seen a little bit of stability post GNU. It's sort of like an opportunity that's popped up that we're definitely not seeing them deploy here, because when they start deploying, it's like a different story in terms of the level of capital. Obviously, you saw Blackstone partnering up with Burstone on their sort of global portfolio. I think that's quite a nice access to capital for them. Is that the type of deal that you'd go and structure? So you're talking to Burstone. So we're looking at, we're talking to Blackstone. They have this type of appetite, and you start to put that together. What does that engagement look like? What is the equity engagement? How is it structured? How are the returns structured? What's the preference in terms of dividend flow? And is that effectively what you're doing?
Yeah, exactly what we would do. So we would try and find international investors, and our thesis is always to focus on international investors. South African investors have been here a long time. They know what they're doing. We can assist. We can certainly bring them into transactions. But where we really spend our energy and time is bringing global international investors into South Africa, the Middle Eastern investors, the Indian investors, Asian investors, US family office investors. These are the guys that are looking for opportunistic transactions, and some are much longer dated transactions as well. So in doing so, we have to be able to showcase good transactions in this market, but you also need, I think the BlackRock CEO was also saying the delistings on the JSE isn't just a South African phenomenon, right? It's a global phenomenon.
Yes.
And that's quite important because, a lot of people see it as a negative angle that you can't raise capital anymore. That's not true. You can raise capital if you're listed and if you're of size. But in South Africa, if you're a small cap company, exceptionally hard to raise capital. I often wonder why they're still listed. And that's probably brought on...
And it's expensive.
Super expensive. And that's what brought on the sort of the change from the JSE. So they deregulating, the market. They've changed to, 2 platforms now, and
being the LTEX and
well, the equivalent. Now they've swapped the main board into 2, and they're in the process of doing that. So the smaller firms, smaller cap, won't have to raise capital in such a difficult way. The regulation.
Okay, so explain that. Sorry, I didn't know that was happening. So the main board's getting split into 2. One has less regulation or owners requirements to list.
Less onerous requirements.
Because you're of a certain market cap.
Because you're of a certain market cap. And that makes a lot of sense. So definitely the JSE is seeing the need for this, and they're bringing it to our market. But at the same time, one can't just be critical of the JSE. You've also got to realize where you fit in, right? There should be people that aren't listed that are listed at the moment,
yes,
right?
Yeah.
And there should be people that are probably unlisted that should go into the market. And if you get that right, and if you look on the private side, so private capital, non-listed capital, there is so much capital coming into this market, both South African capital, and we're starting to see that flow of international capital come in. We just did a roadshow in the UK and Europe, and then a few months ago, we did it in the Middle East. We saw 35 investors in the UK. We saw 20 investors in Paris and the Netherlands. And in the Middle East, I think we saw 30 investors as well. There is a ton of capital waiting to come into South Africa for the right transaction. But South Africa needs to showcase itself. Our biggest challenge is that we're not seeing the amount of banks and advisors like us taking clients to territories outside of SA. When last have you seen a roadshow of a South African client in London and New York and Asia like we used to do?
You actually mentioned this to me the other day. You said, that it was like one of the Middle Eastern guys, one of the guys in UAE or whatever it is saying, oh, it's great to see the South African guys back here, which is
7
interesting.
Years. They haven't seen them in 7 years.
It's amazing, eh?
And they have so much capital, and that capital needs to find a home.
Yeah.
And so we also help sort of educating them about the South African market and about opportunities. And because we don't just do SA, it's easy for me to also educate them for the rest of Africa. I mean,
and you've probably had a whole host. I mean, 7 years, that's a hell of a long time. So you've probably had a whole host of people entering the market who've never had that experience. They've never gone there. They've never thought about it. It's not even a thing that you think about. You know what I mean? And it's probably similar to us in the property market when you think, okay, we're taking this property to market. It's a nice long-term lease. And you start thinking about it when it can take it to these investors. We don't sit there thinking, which offshore investors can we actually take this to? And it's the same type of thing. It's like we would be interested, but you've got to structure it a certain way. You've got to work with the corporate finance guys. You've got to bring us in. And that could be another avenue. But we've spent a decade not doing that. So why do you suddenly wake up and think about it one day? Yeah, interesting. I've got a couple of comments, but take us back. Actually, we probably we put the cart before the horse, Take us back to your career running through, where you started. I know, you've worked at some of the big banks and, global, corporate finance banks in the world. And how it came to sort of founding YW and what YW is about.
Sure. No, it's been a long road. So I counted 20 years in capital raising now. Started at Deutsche in SA, moved to London, then moved from London to Russia, headed up capital raising for Russia, for a Russian bank. That put me throughout from Mongolia to Kazakhstan to Poland. When Poland was opening up, that's quite a while ago.
Amazing.
And then back to South Africa.
What an experience, though. I mean,
it was incredible.
How many people have done that,
And that exposure is what you need. When you look at an advisor, your advisor either has been in Johannesburg their entire lives, and that's their world, or your advisor has been global. And that's what's important, is how do you attract advisors that understand where you're growing as a business? And that's what we are able to do, which helps a lot. But
and I suppose when you're working with people, you're talking about like 15 billion rand, whatever. These are substantial numbers. That is global capital. It's not even a billion rand, even a few 100 million rand it's global capital. It's not like they're sitting and saying, let's keep it all in South Africa. In fact, I suppose the song and dance for the last, how long? 7 years, 5 years, 10 years is right, how many of these 100 millions can we get out of South Africa, except for Cape Town,
Except for Cape Town. Yeah. That's interesting. I think the market's changing a bit. I also think that, we, for the last 10 years, we have seen capital just flow out of South Africa, personal capital. Now, I'm not talking about foreign direct investment.
Yeah.
We've heard numbers that there's constantly an uptick in foreign direct investment. But I'm talking about personal, your money. Where do you keep your money?
What money?
But, how do you offshore your capital and what do you do? Now we're talking to South African families sitting in London that have moved their money offshore, that want to invest back in SA because they're not getting the returns that they thought they'd be getting in Europe and, sort of the developed world. So that's an incredible phenomenon that we're starting to see. And as I think the GNU comes into action, as we're seeing, infrastructure being sorted out with Eskom, with Transnet, with all of that, you're certainly seeing growth. I don't know if you saw the IMF increase the growth forecast of SA from 0.2% and 0.3% between this year and next year to 1.1 and 1.5%. And government's aiming to get that beyond 2%. Once you move into that realm.
And Gore and them are talking about 3%.
Absolutely.
Yeah.
No, I mean, if we can get there, South Africa's pumping. Yeah. The question is, what do you invest in and where do you invest in it? But there's no other country, I think, in this environment with the same risk statistics. It's easy to say you'll get 6% somewhere else. But the reality is, really, do you want to go into Sierra Leone and be investing there if you know that the infrastructure just isn't there, which is one of the points you raised earlier on. Is infrastructure. Are we keeping on top of infrastructure? And can we say to both international and local investors, they should keep putting their money into this country if we're not maintaining infrastructure?
Yeah. So one of my mates, Will Ridge, he's the head of equity sales and derivatives at an Investec bank. He puts out a note most mornings. I see he's handed off to Hayden most mornings, actually, so he's stopped doing it as much. But he writes a great note. And what he did the other day, I think it was a couple of days ago, is he actually went and got sentiment from friends, colleagues, clients, just people. They might have a big business, a small business. It could be you and I, someone who walks past. And he basically recorded the sentiment and said, what do you think of the GNU? Where do you what are you doing at the moment? What are you doing with your money, etc.? And then put all of those answers out in the note. So it was actually a fascinating one. And a lot of the kind of general comment from the man in the street, and the man in the street can also own a large business in his scenario, but basically everyone's saying, we had all this money offshore, and actually we're going to just do a renovation at home now, and we're actually just going to, what we're going to do? We've been renting for 5 years. We're actually going to buy the property now, and so you're seeing, and then a lot of families moving back from the UK back to South Africa. I know one or two people myself, and it's that kind of thing. I also noticed the traffic's back in Gauteng. In Joburg. Have you noticed that?
It has come back.
What is that about?
It's positive. I think people are coming back to work.
It's one of those unhappy things that makes me happy. And the other thing is that's going to put even more strain on our infrastructure, But
absolutely.
So it was just a fascinating note and really well put together, and I thought quite a clever thing to do. I'd love to do that with our clients. Go and ask them. Listen, what are you seeing? What are you thinking? What are you doing with your business? Because what we've seen is, certainly from our perspective, I'd love to get your take. Is we've seen a huge sort of swelling in business confidence and confidence about the future and can we deploy our capital, that type of thing. But there is a lag period. So almost once that GNU was formed and everyone thought the next day you kind of get to the office and you're like, let's go, and you can't do it that fast. It just doesn't work like that. The phone doesn't just suddenly start ringing. But what did happen? Speaking to some of the guys at Investec, is suddenly you get a lot of inbound calls. How do you open an account there? And what would happen if I put this much there? And they start asking the question. So the inbound intel starts to happen in the market. You actually mentioned to me that you got a lot of, phone calls. What's happening there? What's the opportunity? Where can we put our capital, type of thing at that point in time. How long do you think this lag period is, until you actually start feeling that change in growth in the market?
Yeah, I think what the market's saying, by June, July next year, we should start, sort of hitting a home run on this. They want to see the GNU stay in power. They want to see the impact of the GNU, right? And then they want to also see, sort of the market stabilizing generally. And I think we're getting there. I think we're doing exceptionally well on a number of fronts, but I think you've got to give it time. And 12 months is probably the right amount of time. Yeah. But we also have, and I keep saying this, a limited amount of time to attract foreign capital. If you're not attracting that foreign capital in the first sort of, 18 months of GNU, then we've lost an opportunity, and we've got to focus on attracting that foreign capital into SA as well. You
mentioned exactly that, and I actually wrote it down here. And it was one of the things you mentioned was, we must get Transnet to work. These things. So there are a couple of infrastructure things. One was infrastructure. You said this. I think this was your comment. Infrastructure, safety, and it was energy, security, logistics. That's what it was. Energy, security, logistics. So security being actually the safety of the people, like security, like police. Is that what you're talking about?
That's right. Yeah.
Energy, security, logistics. So energy feels like we've.
Touch wood.
Yeah. Energy feels like we've sorted that out. What a disaster that's been for the last 10 years. I mean, wow. And then logistics, and obviously Henny was there talking about their perspective on what, and also interesting statistic that DHL had a bigger coverage than the World Bank in Africa. It's just fascinating.
More offices around the world than Coca-Cola. How incredible.
That's just a number.
And he was super positive about South Africa and what we're doing and the turnaround at government level. Yeah. And he's seeing it because he sits on a lot of those committees as well.
Yeah. But one of the things he also said was they have reduced their logistics routes, or the logistics routes have reduced in Africa, which then constrains trade, constrains GDP growth. I mean, it just constrains everything because the road network was such a disaster and was crumbling in certain areas. So that's one thing that we have to realize in South Africa, that if you don't maintain your infrastructure and that your road network's not there and it's not completely backlogged. I mean, you go to, if you look what they've done in Kenya, I mean, originally it was just like a 4-way stop through the middle of, Kenya, disaster. Yeah. And they've put sort of ring roads around and they're actually trying to change that whole, it's happening in Dubai.
Yeah.
So I was there, whatever it was, 2 weeks ago. The traffic is insane, really. I mean, everyone wants to be around the marina, and that's sort of the main area, and then you've got the main road that runs through the middle. I won't do myself the service of trying to remember it now, but anyway, it's a road that runs through the middle, and they haven't really thought that far ahead. Then they said, what we're going to do? We're going to put a tram and it's going to alleviate this. Made it worse, So now they've really got to start thinking about how they should get Elon Musk's boring company in there and just put some tunnels underneath, That's what they need to do, because in order to fund their expansion and do the doubling of the population there, they want to go from sort of just over 3 million to 7 million, in the next 10 years. I think it's even shorter than that. And man, you need to sort the roads out there.
You do.
You can get involved in some serious traffic jams in Dubai, let me tell you. So it's not perfect, but you also have 30, 40 buildings under construction. The GDP is the second highest growth rate in the world under India. It's 5.7%. I mean, you can listen, 5.7% you can feel. Okay, yeah. It's like driving a massive V8. You watch the petrol going down. It's the other way around, Yeah. This thing is just, you can feel the money there. It's wild, So I hope we can get to those kind of levels. But in South Africa, I think we need to realize that infrastructure is all critical. And you sit in Johannesburg and you see the water infrastructure degrading, and these things are more important than you think. So the question, how do we get, realistically, how do we get public-private partnerships off the ground? What are the privates actually looking for to go and say, we're happy to commit 10 billion rand?
Yeah. We need return on our capital, first and most important. If we don't get those numbers, you're not going to invest. And
is that a hurdle rate in excess of what the bank's prime rate would be? What are we talking about?
It just depends on the investor. Okay. But the reality is, it has to make sense to the investor to put their money at risk, right? Firstly. Secondly is, you have to have a framework to support that, and you have to have an infrastructure to support that. I'll give you one example. We have a client who wants to come into iron ore in the Northern Cape. The challenge they face is the rail network, right, is not working at its maximum utility, firstly. Secondly is we do have a level of empowerment on that, and they were trying to move allocations just from the mega-sized mining companies to some of the smaller-sized mining companies. Not the most efficient, but possibly the right social, sort of elements, socioeconomic elements to it. But what we've, in theory, done is we've made it harder to move iron ore from the northern provinces to the port. Then you move it, let's assume you get it on the rail, and it works, and the rail gets there in time. Once it gets to the port, it's an absolute disaster, right? So Transnet is critical in almost any business in this country that needs the rail, that needs the port. The roads are being, in my view, disintegrated because the rail doesn't work. If we had a working rail network, you'd have those big trucks that you see every time you're traveling somewhere. They wouldn't be on the road, right? Yeah. They'd be on rail. So we really need to fix that. I think the Eskom turning around of Eskom has been incredible. I mean, it's a story that I'd like to hear that has been a success story of our country, right? And we need sustainability there. So let's see how it goes, more than just 200 plus days. But if we get that right, and if we get the Transnet right, then you're starting to see investors saying, actually, it's not just your stock market and your bond market we're interested in. We're actually interested in real investment, tangible stuff that you can see. What does that do? That creates jobs, that creates an environment, that creates, business networks. There's so much that comes out of there. So when people look at foreign direct investment, I think lots of guys just get caught up in how much money is flowing to our bond market and our equity market. We need more than that. We need it to flow into business in the private sector to see the difference.
Yeah. So here's a good case example, right? So in South Africa, the rail network is effectively, any private business is locked out of the rail network. So Jamie Holly has the business Traction, one of the biggest rail operators, not the actual rail network, but the actual locomotive operators in Africa, right? They shift serious tonnage around Africa. They're not allowed into South Africa. And they've been lobbying for the longest time to actually try and get this right. And I believe that these regulations have actually changed. I read about it, and Jamie was talking about it, certainly. Now, that's where the investment starts to come, right? So now he's going to say, right, I'll be a locomotive operator in South Africa. So I'm going to go and put myself in there, and I'm going to take the risk that we have an opportunity here to make profit as a business, right? But I probably need some more trains. Yeah. Now he's going to need funding. Where's the funding coming from? And that's the investment that you're talking about. It's not necessarily like we're loaning money to South Africa. It's private businesses going, locomotive's not cheap. So, and you got to run that business here. It's just an expansion. And if you imagine that, Africa works, how can we not get South Africa to work? Must be.
Do you know, it's interesting. In the last 3 months, we've had about 4 rail operators talk to us about their capital. And we've not seen rail operators in this market be excited for a very long time.
Really? Yeah.
So we're hoping something's coming, sort of in that space. But it's about getting PPPs right. I think, as you said earlier on in the conversation, is that you need PPPs that work for both sides. Yeah. It needs to work for government, but it needs to work for private sector. This is not charity work. Government cannot expect the private sector, because the private sector has already come to the party, so much so. You just look at Johannesburg as an example. There's certain areas where our developers are building their own roads, are putting their own sewage and water plants in.
That's almost the standard.
It's a standard, but that's not normal. Imagine what that does to your IRRs on investments. Yeah. And so therefore we become uncompetitive, and that we've got to fix.
Yeah. So would you see, if you were to, looking glass this whole thing, would you see a Transnet going into some format of public-private partnership? And Transnet's a kind of, operation that you're going to see like the PRC going into, public, but that's public-public partnerships. Could you see them going into a public-private partnership? Is that, or maybe just a function, like similar to what Eskom did, where they had distribution, logistics, and supply, I think it was. could they break it up like that and have locomotives, network?
Yeah, absolutely. I mean, that's exactly what they're trying to do at the Eskom level,
Really?
as you say. And what we've seen in countries, not just in SA, take Rwanda, where we do quite a bit of work, take Mozambique, where we do quite a bit of work. You've seen these public-private partnerships work, and you've seen governments enter into them, eventually sell down. I mean, Telkom in South Africa was a great example, right? Is that in the 2000s, Telkom privatized. And
At Gyro or whatever.
well, that's the property side.
Oh, that's the property side,
But pure Telkom privatized, and they sold off a big stake onto the stock market, and you have private investors coming into it. And for many years, Telkom was hugely successful as an entity. That's changed. And then you had Vodacom, which, was partly part of that stake they had, which was unbundled as well over time.
Yes.
So we have experience in positive privatizations and public-private partnerships, and we've just got to bring that to the fore. As Trudy said in sort of the session we had recently, she said it's been a long time since we've seen successful PPPs. And I think that also scares the market a little bit. We want to see some successful PPPs out there to see more capital flow in.
Yeah. Asher was fascinating. I was blown away. I mean, he's really got a good grasp of what needs to happen. There was I think it was Thabo Mbeki. He was talking about Thabo Mbeki's era where he was talking about how effectively a lot of the government departments and divisions are almost overcomplicating it, but trying to achieve the same thing. They're trying to do the same. They're overlapping. It's not efficient. So now you've got, 30 people doing something that 15 people could do, 10 people could do, because you're not communicating well, And they talked about almost a bidding process for, who's going to bid on this project and, sort of make it a little bit more capitalist in a sense, what government's actually trying to achieve. And I thought about, just in general in this economy, what people should be trying to do is almost, we should almost say as a department, these are the things that we're trying to do. These are the priority things, and these are the low-hanging fruits, For the general, I would, if you came to me and said to me, what part of your profit are you willing to contribute to these things that are going to impact your community or your sector or whatever it might be, as like a one-off or over a 2-year period or whatever it is, I'm pretty sure that we'd say, well, if these are the things you're going to do, and it's been managed by, let's say it gets managed by Discovery, because Gore's like, he's the next president maybe,
Sure.
But basically, he's very good at organizing business to, deploy and support government. And I think it's fantastic. He's quite, outspoken, and, he's thought through it. And, if he said, in this sector, what percentage of your profit are you willing to part with to achieve these things? And these are the low-hanging fruits, and these are the priority items. I'm pretty sure people will come to the party if it was managed by someone who was going to definitely do it.
I think if it was managed by someone, on the outside and not in government, because we've
100%.
We've definitely lost faith in government, and I think it's fair to say that, right? Is that government needs to buy back that faith we used to have in them. And then I think the issue is we are already contributing significantly as the private sector to tax, to a whole bunch of other areas that we've stepped in because government has not been able to provide. Right. So in fact, when you look at the cost, it's already significant. But I can assure you that even if you said on top of everything else you're doing, guys, will you put another 1% towards fixing Gauteng, I can assure you the answer is yes. Yeah. The issue we have in South Africa is we don't believe in ourselves. So when we go internationally and we sell South Africa, for the last 15 years, every time I sold South Africa to an investor or a client, the first 50 minutes, I was talking about South Africa macroeconomic issues and things like that, which is crazy, right? Yeah. And then I have 10 minutes to talk about Galetti, right? To sell the investment case of Galetti. I can't do that, right? Yeah. Of lately, that's changed, and hopefully it'll continue to change. Where we're not trying to convince people to invest in South Africa. I mean, you're not in a war-torn country that people should be so averse to investing here. We have the instruments to fix this country. Yeah. We need to do that. Private sector will always play a role, but you can't over-expect what you're getting out of private sector. There's a point where private sector goes, well, hang on. and you've seen this in a lot of South African corporates. In the last 10 years, it's been better making money elsewhere than in South Africa alone.
Yeah. Can you remember the stats? Ease of doing business is a key indicator, because Adrian Saville was Professor Adrian Saville was the moderator. Yeah.
Who's moderator? Yeah.
Very good. I mean, I love his stuff. Yeah. So I've written it down. Ease of doing business as a key indicator. Okay. Rwanda goes, was it over 10 years or 5 years? I think I've written here 10 years. In 10 years, they go from position 158 to position 29. Hey?
Really incredible.
It's amazing. South Africa had the grand achievement of going at the same time from position 24 to position 84. I mean, you can't do that. That's terrible, you know? So in 10 years' time, we get to, that's a big statement right there, okay? Yeah. Now, in Rwanda, they put so many practical things in place, okay? Like everyone mentions the litter thing. I mean, if you don't know about the litter thing, you know about this. Yeah. Everyone has to get outside and pick up the litter, you know? I can't stand the litter in Gauteng. Why can't everyone just pick it up? You know, and if you say, okay, as a collective, guys, everyone, this is one of the things. Maybe it's not that I'm contributing 1% of our profit or whatever it is. Maybe actually we just get together and say, okay, what we're going to do is make sure there's no litter in Rosebank. And then that frees up some time, or it's our contribution, it's our time. We do half an hour or whatever it is to doing that, and fix your verge as well, and do the sidewalk over here. I mean, these small, low-hanging things. This is how the DA did so well in Cape Town. They didn't go and tackle the biggest item. They tackled the smallest item. And they said, look at our success over here. And then they told everyone about their success. And then they did the next one, and they told everyone about it. And you look at Leon Schreiber now in the Department of Home Affairs. He's doing the best. He's got like a huge green tick. Why? Because he's just doing his job, okay? Sure. He's doing it faster, and he's telling everyone, actually, this is what I did. I mean, I don't know. They said they cleared this backlog of 250,000. Is 250,000 a big amount or a small amount? Me sitting here as the South African, I'm thinking 250,000, fantastic work. They might do that every month. Who knows? Yeah. But he's telling everyone, and then that causes me to think, jeepers, we're actually doing so well here. This is a fantastic thing. And then, you know, people, look at South Africa. They're doing so well in terms of getting skilled workers back, and so I'm going to apply to go to South Africa. It looks fantastic there, and my dollars will go far, you know. That's what everyone needs to do.
But let me give you an example. Those 250,000, you know, sort of skilled visas that he's now provided.
Yes.
Majority of them are going to find their way to Johannesburg, right? Not Cape Town, not Durban, not Pretoria, maybe a bit, but majority into Johannesburg. What are they going to do? They're going to need nice homes for them and their families. They're going to need services, and that moves the market significantly. As we see this backlog reducing, you're going to see more business people coming back into Sandton. You know, Sandton still is, you know better than me, right? Underlet or overlet, sorry. Whereas you really need to bring in international sort of business people to start changing that. You need offices. You need people to return to offices. The fact that we haven't returned back to the office, for me, is just shocking. That's our own goal, right? And we don't have the privilege other countries have, where, you know, it's better to work out of home. Our productivity is low as it is. You now work at home with your dog and, you know, 2 babies. I can assure you your productivity is not going up. It's going down. So the guys who say, it's easier because you don't have to travel, that, you know, every time you travel, you're going to use, you know, gas. You're going to go to a petrol station. Someone's going to get a tip. You're going to stop at a shop. You're going to buy something. You're going to get to work. You're going to use an office. That changes the market and the environment. As you say, Joburg is starting to get busier, but we could do much better than what we have.
Absolutely. We love Investec here, so we're not saying anything bad. We love Investec, but I remember in sort of 2020, 2021, which was the height of work from home. You know, we were trying to get some funding agreement through the bank order, but everyone was working from home. And then the agreement was in the office, but we were only going there tomorrow. It took way longer than it should have. Usually they're pretty rapid. It took way longer than they should have because this wasn't really communication and that kind of thing. And that's just not something that you expect from them ever. But this is happening. Why? Because people are working at home, and they don't even have sort of super lazy people. They were like pretty educated, good guys there. But it's just a logistical issue, you know. And that was happening there. So you can imagine what's happening in general. I mean, it must be a nightmare. you say people aren't returning to office, but they are. They are starting to come back. There are a lot of people that aren't, and I think that in general, businesses got more efficient. So they said, well, do we need 100 people to do what 70 people could do? So that's why businesses got more efficient. The unemployment rate went up. And so all of that changed, but businesses also got more profitable. But then people have started to come back to the office, and certainly you see AWS recently saying, right, global decision, everyone's going back to the office. That's one of the big guys, they're significant employers. So we're seeing Cape Town, Durban, a lot of call centers coming in, and this is, foreign call center, Spanish call center setting up in Cape Town or Durban or whatever it is. And so they're actually experiencing very low vacancies in their office sector. But in Gauteng, we still, specifically Sandton, for example, we're experiencing a higher vacancy in the office sector. And that still needs a net take-up. That has to do with people moving to Cape Town and, setting up elsewhere. And literally businesses saying, you know what, if we have the decision, we're going to vote with our feet and we're just going to move to Durban and set up there.
Yeah.
Done.
But let me challenge you on something.
Yeah.
So I hear that, and I do think there's an increase of people coming back to the office.
Sure.
But the area that I'm concerned about is where's the skill development, right? If you have youngsters coming out of university and they're sitting at home, how are they developing their skill set, the human interaction ability? And that's the issue that I think we're lagging a lot on, is that you need that access. It's lovely being at home. It's easy to get your lunch and do whatever you want to. Perfect. But you actually don't realize how much you're missing out on that learning curve. And in my view, I actually think we have, maybe corporates have become a little more efficient, but I think a lot of them have become less efficient than they were pre-COVID.
Yeah.
And so I think there's a mixture of both. And in my view, I'm old school, so if we came back to the office straight after lockdown 1.
Same, yeah.
And, and it worked perfectly because
we were having well-timed coffee meetings at Motherland.
Yeah.
Fancy seeing you all here.
And everyone was back in certain businesses. But you've seen the difference in the change in your business, for example.
Yes.
You've seen how close your team is, how well they work together, and that sort of that environment that we don't see in a lot of other businesses.
I 100% agree. And we were talking at one point in 2020, we were trying to move illegal chambers in Cape Town. And what they were explaining to us is that the new guys coming in, just the pure bumping into the senior councils, because what happens to the SCs, they pass down work. They say, it's not for me, and I'm going to work with a junior and all the rest of it. And it's literally relationships built in the lift.
Yeah.
That type of thing. And that just does not happen. So now the juniors coming in aren't getting any work from the seniors. It's going to the senior juniors who were there, and it creates this air gap for the guys getting into the industry. And it's the same for everything. Here you learn on the ground. Here you learn a lot of being part of a brokerage is just the discussions had around the office,
Absolutely.
And we have, there are 4 of us in the business. We were talking last night and we were saying, we used to do a coffee every single morning. We wait for one another, go and have a coffee. And so much was talked about at that informal meeting that drove what we did in the business. And over time, one of the guys moved to Cape Town and one of the guys were focusing, and then you just stop doing it, and suddenly you realize, hang on, guys, we're not talking like the way that we used to. We're going to be doing that going forward, So it's just one of those things. It's just a small thing, but it kind of highlights exactly what you're saying.
Can I also just add one more thing to that?
Yeah.
What we're finding quite interesting is we're also finding, which is what you said, is that South Africans coming back to SA.
Yeah.
And that, there was a stat I read somewhere, which was 1 in every 3 are coming back to South Africa. And it's incredible because we're hiring some of them because it's good to have that energy. The guys who've sat in London, who've sat in Australia and elsewhere, goodness knows why Australia, but elsewhere in the world.
I like Australia.
Coming back to SA. And they bring with them, their own energy, their own ability in terms of how they've worked and the work ethic. And we're starting to see that starting to move back into Joburg, which is quite exciting.
Yeah, big time. I mean, that's exactly what you want. I was reading What It Takes. I told you, it's Steven Schwartzel's book about finding Blackstone and actually how BlackRock was started in Blackstone. That was I didn't actually realize that. And look how big BlackRock is now, but look how big Blackstone is. But it was those people working together that started something, and then went in their different directions at some point. But that's what happens. You need people working together. Someone knows 50%, someone else knows another 50%. You got 100%, and you start to deploy. Tell me, we're starting to go into an interest rate declining market. Okay, what opportunities does that present for you in your business, and what opportunities does it present for just in general in the economy, trying to raise capital for what we're trying to do, public-private partnerships, etc.?
Yeah, I think it makes a big difference. Is that we've had sort of
to interrupt you. We've got, who was it? Trudy, I think, that was so it was Ashore.
Yeah.
And he broke down the percentage of what the 100% of government's or the tax revenue was. And correct me if I'm wrong, but 60% of it goes to social wage.
Yes.
20% of it goes to interest on our debt bill, and we're left with 20% to run the country.
That's right.
Wow.
Those are about the numbers.
Yeah.
Yeah. I mean, but I think, the wage bill is the issue. Right, we've got to cut. That's where the inefficiencies come in, right? And the average government worker makes a ton of money. So it's not just a wage bill; it's how expensive that wage bill is, right? And that's constantly going to be the issue. Sorry, what was your question?
Yeah. So my question was, how does you started to answer it. How does the declining interest rates impact the economy in general? I mean, if we're spending 20% on interest. Does this help us quite significantly, or?
So absolutely it does. And 25 bips are not going to move the needle, let's be fair. Yeah. So let's hope, sort of our governors listening and there's more significant, drops coming in. But with inflation decreasing, and staying a little more stable, we should see bigger drops, sort of in interest rates. What does that mean? That means basically you have more money to spend on other things. And that's
social wages. Yes.
Hopefully not.
Yeah. Another 300 Rand.
And that moves into our economy, and sort of that's the benefit when you're looking to buy a house, and you're 2% lower than where you were last year or year before. The chances of you being able to afford the affordability of things becomes much more realistic for you. So it's absolutely important. It also drives the economy because there's positivity in the economy. People are moving, especially in your sector. There's no question. In my view, I think our REITs have had a difficult season, right? A couple of seasons. And I think you're going to start seeing that change. And we've already seen a bit of a run.
Yeah.
And that'll continue to be. And that's before the interest rates have really fallen off, further. But hopefully we're going to see that come through.
Yeah. It's almost the expectation of the interest rates. I looked at Killen and Glovu's report that he put out the other day, and he was saying, the REITs market overall, SA Inc. has moved sort of 50% in the last 12 months. Bonds and equities sort of sitting around the 26, the equities at least at 26%, and and then you get bonds. And so, I mean, if you look at that, that's quite significant. And he says, right, how did we see this growth? And there were, at the beginning of the year, it was, there's going to be an interest rate cut, and it shot up. And then it said, interest rates are higher for longer, and it went back down.
Yeah. And
then it said, no, the Fed started signaling, actually, we're stabilizing our interest rate hiking. And it started to go up, and it said, this GNU is a problem. And then it said, actually, this GNU is good. And then actually at the same time, there are definitely interest rates cuts. And so that's actually what's kind of propelled it through the year. But you definitely saw a bit of a back and forth whipsaw type of movement into the market. But I think that REIT sector is it's a good one. That and retail, obviously, is hopefully you get some discretionary income. Hopefully this two-pot doesn't just go towards settling debt and it goes towards a little bit of a spend. Those seem to be the two beneficiaries.
I saw the number. I can't remember if it was about 8 billion that the taxman gets out of this two-pot system, and that they call that like almost a windfall for them. But it does make sense. I mean, it benefits everyone, right? The two-pot system. But the reality is it's about sustainability, right? Is that we can have these things, but you need to make sure it's sustainable for international investors to start looking at South Africa again. You can't just have 1 quarter positive. You've got to have 2 years of sort of positivity, and that's what changes. This year alone, we've raised almost 6 billion rand of equity. Equity is much harder to raise than debt.
Internal or foreign coming in?
Both foreign and internal. 6 billion if this market moves, we can at least double or triple that. And that's just one firm. And we're a small firm in comparison to
so modest, eh? So modest.
But that's exciting to me. It's exciting to see my counterparts saying the same things, right? Is that we can raise more capital, we can put that to use in our economy. And I think that if we see that sustainability, you'll see a huge amount. You're talking about BlackRock, Blackstone, JP, all of these guys, Morgan Stanley, all of them saying they're ready to come back into South Africa in a significant way. And they're just waiting for sustainability. And we get that right. And you get everything else we've spoken about during this podcast right. I think we're in a state of really positive territory.
Mm. As long as Ramaphosa doesn't make any more nice comments to Putin and just risk the whole GNU, just settle down, What do you think about that? Can I ask you this question? I don't know how much insight you have into it and how much this is your foray, but you have some Russian experience, you have a global picture that you're looking at, right? This move away from the West or all of the sort of big global superpowers trying to sort of isolate themselves a little bit, but then really try and fight for who's coming with them into their, pond, And we're aligning with the BRICS and, Russia and China and India. What do you think of that movement? I mean, if you think, like the big sort of global economy planners do, I listened to Clem Sunter once and he'd gone to there's the Chinese school, the planning school, the economic planning school. It's like no one's allowed in, the first Westerner ever allowed in. And basically he says, what is the game? His thing is always, what is the game? What are the rules of the game? What are the penalties? How do you win the game, And then you determine, and so he comes up with this game theory ultimately, Clem's, and the flags of all that is a fantastic read. But what he said to them, when did the game begin? And he was expecting them to say, okay, well, 10 years ago. They said, no, the game began 300 years ago or something, Whoa, that's, we ain't thinking 300 years ahead, So we're thinking to next year. And, if you start thinking like that globally as a macro picture, what do you think of that for South Africa, aligning with the BRICS as opposed to aligning with the West, as it were?
Simply not helpful. I mean, that's
really,
that's where we are. The reality is, no matter where we are ideologically, right? We know that our government is ideologically aligned to the East, certainly to those parties that supported them during, apartheid and getting, support during that time. So we understand that. I fully accept it. The reality is most of our business and our trading partners are in the West. So whether you like it or not, my view would have been we could just be silent on certain things. I understand where you need to put your hand up, you need to put your hand up. Where there's gross human rights violations or something to that. But we're no expert in a lot of areas that we seem to think we're experts in. In my view, we need to fix our economy. We need to create jobs. We need to create living wages. Those are the things we should be focused on. We shouldn't be just focused on international affairs. The reality is, and I think government will say, we're not just focused on that. We're focused on both. But the reality is perception is everything. And I think the international market is questioning where we lie. And I don't even think we know where we stand. Are we a fully fledged BRICS member, the small, S, or, sort of are we, aligned to the West? I'm not really even sure who we align to. Yeah. But does it really matter and do we care? The average South African, I can assure you, does not care. They care about things that are important to them. And we need to come back and focus, on that. And we need to play it like other countries do, where they have beliefs and they have views, but they very much keep it themselves. Like, when I look at India, it's a great case in point. Is at one point India is seeing the Western powers on the other side. He has a picture with the BRICS powers. You never know where he is. He's all over, and that's great. It's been great for India. I mean, growing at 6%, an economy that just doesn't stop. In the next 9 years, they'll double their economy.
Wow!
You should be focused on things like that.
Yeah. And I mean, there's so many examples across the world of countries that have gone from really the wrong trajectory to, wow. Singapore's one.
Absolutely. Poland's one. I remember when I first went to Poland 15 years ago, 18 years ago, when Poland was starting to open up. Poland has had year on year an increase in their GDP. They've had growth every single year since we've reached democracy in South Africa. They became a free nation. And that economy and that country has changed hugely. So if you go to Poland today, I can tell you 20 years ago, you would not want to relocate your family to Poland. Today, Poland is a developed, incredible economy and a wonderful environment. You got it right. They got it right. Government is super important in these cases. We need a hands-on government. We need government to be fully involved in what we're trying to do here.
Business focus, it's like Rassi says, let the main thing be the main thing. Like, let's just make some money, let's get real. Mesh, it's been so great and interesting talking to you. I mean, I could sit here for another hour and talk and unpack like different ideas, and you've had like a real global oversight, and the people that you're talking to must be fascinating. I mean, we could get into those stories. Let's talk about what those guys are planning for. What are their concerns? What are your concerns? You got 15 billion rand, but I bet you they like lose sleep at night about making sure that they don't lose the 15 billion. So, I mean, that's a whole nother subject we'll get into, but it's been a fascinating chat. And I think I'm super positive for what we're doing as a country. And, I've got a positive outlook for Johannesburg, and I hope it turns around, and I hope we see the investment, and I hope people get together as smaller groups and put up a list of things that they're going to tick off and start ticking them off. Who's going to put their hand up to do it? Maybe we should. Get some momentum.
And I'll say this last point is that there is capital out there for transactions, for corporates. You've got to talk to the right people who have the right experience. If you speak, I always say this, if you speak to a guy who's been in Joburg his whole life, his network is Joburg. Right. If you speak to a guy in a firm that has gone global, you're going to get access to capital you never thought was there. Yeah. And that's what we need to do better. And I'm not just saying, sort of our firm alone. There's lots of firms out there, but you should be speaking to these guys to see how you access capital, because you want to play in this growth that is about to come, and you can't be too late to the party.
Yeah. Amazing. It's been a privilege, and it's been really fascinating. Thanks for coming to join us.
Pleasure. Thanks for having me.